Welcome, my dear friends. Welcome, my dear friends. In today's episode, there's something phenomenal. There's something really good and awesome. I'm going to be showing to you, and I would love you to really put this. I'm going to show you to practice. I've spent a lot of time. I've spent. Uh, Thank you, Mr. Marvin, for joining. Well, I look forward to presenting this to you people. I know it is for free, but free things are never valued. Well, I'm so grateful that I've learned this. I've kept my eyes up to the charts, and there's something new that I've really seen. So for today's lesson, I think I don't want to take much of your time. I don't know whether some other people will have something to present, but I may cover something about new strategy. I saw new strategy. I'll cover something small about maybe market structure. Yeah, and I think I'll call it a day. Yeah, the more you observe something, the more you see something phenomenal. Well, straight to what uh, straight to what I've prepared for you today. One, this new strategy entails uh, identifying regions of support and resistance. When you identify this region of support and resistance, of course, you keep in mind the market structure. This is the very, very important thing. Market structure comes first before you intend to look for the supports and resistance. Now, right now, when we look at this market structure at the 4-hour time frame, we can see higher high, we can see higher low. Oh, we can see higher high, higher high, hey, higher high, higher low, higher high. It may come back to form a higher low, and it continue going down. So after identifying market structure, we have now a bias of buying, a bias of buying on the 4-hour time frame. So when you go to 4-hour, the market is being respected. What do I mean by market structure? You see, this is the previous lower low, previous higher high, and this is lower low. Then this is a higher high. The market came back and tested the previous higher high. So I draw my rectangle here today to identify market structure being respected. When I also draw here a rectangle like this, when I draw a rectangle like this, I hope you guys are hearing me. I draw a rectangle to define market structure, so I'm looking at only buys. So still I'll go down to 4-hour 30 minutes. Yes, my bias is still buy. I'll go to 15. My bias is still buy. Are you seeing now how candles are being replicated very well? Then when I go to 5 minutes, I'm still seeing the bias of buy. But I have this small indicator here that counts for me the percentage of move to the upside, and also the percentage of move to the downside. Here it has moved like 3.8% to the upside, and it is telling me that since this is a 5 minutes time frame, I have 30 seconds to finish this candle that is printing. So it's a nice indicator. Well, that is market structure. Now in mind we have a bias of buy. Now the strategy is like this. You go on 4-hour minute time frame, and you identify uh, the support and resistances. Look, you see this candle and this candle, they form a support here. You see, they form a support here. Likewise, this candle, likewise this candle here, this candle here, this red candle, this bearish candle and bullish candle, they form my support region. Maybe let me write there something. It forms my support. This is support. I consider this support. I consider when a bearish harami, this pattern is called a bearish harami, whereby the bullish candle, the bearish candle is engulfing the bearish candle. It is a bearish harami. So I consider this to be my bearish harami and my support zone. And if I'm to make an operation, I will consider a buy here. When I buy around this region and I put here my stop loss, below this candle, slightly below this candle, you see the market came down and took up to the upside. You see it respected my stop loss here. My stop loss here. Now if I have missed this run, I will wait again for this candle to finish printing, then I buy around here and I put here my stop loss, and I put below this candle my stop loss. You see market never came back to attack my stop loss, meaning that it is respecting this support zone. You look at the former candle and the before candle. Now take an instance here. If we buy here and we put our stop loss down this candle here, you see market doesn't attack our stop loss. You get? Can you guys get me? Can you understand me? Am I communicating something right here? Right here? Can I see a yes from you guys? Abali mumpulira. Okay.
We can hear you.
Okay. Okay, let me continue now. So again I find another support region here. I wait. I have to wait for these two candles to finish to give me my support here before I make my operation. You see this candle finished printing, then it started, this one started printing, boom, it went to the upside. It never attacked my stop loss down here. I buy at the open, or I can wait for price to come down or come here. Before I do what, I execute my my buy or sell order. Boom, the market respected this stop and it went up. Now I go to the next buy. I buy here. Then I put my stop loss to this below candle here. I put my stop loss to this below candle here. And hello, you who have just joined us, please mute your mic. You see, I'll continue if I'm to buy here, I'll have to put my stop loss here. You see, on this candle, the market went up but came down. But here you have to be a bit patient. If you want to make an early entry, you can wait and maybe make your entry from here or here or here, while putting your stop loss below the previous candle. See, you see, market has not yet touched our stop loss as of now, meaning that the market is respecting this support region. This is 4 hour. We do our analysis from 4 hour, 1 hour, below to the smallest time frame. So this example is on a high time frame. Now let us go to the 1 hour. Still the same thing happens when we come down to 1 hour. Identify this region. We have found a harami here. A harami. You see, a harami. You wait for this candle to finish printing, making this support region. Then you wait for the candle. You can execute your buy around here, and you put your stop loss below the previous candle. Boom. You see that the market respected this support by not attacking our stop loss. You get? Now still, if you come and buy around here, and you put your stop loss below this previous candle here, see, the market respected our stop loss, and boom, it went to the upside. Now a scenario comes back. Now you buy here, you put your stop loss here, below this smaller candle. You see, meaning market is still respecting this support. You get? Market is still respecting this support. Our stop loss is not being hurt, but you never know. When you put your stop loss here, it may be attacked. You understand? It may be attacked. You know, the business we have subscribed to, it is a business of chances. So if you experience a loss, don't cry. More opportunities are there. But with this new strategy, with this new layout, you can take a trade on every candle you feel like, when you have first identified the market bias from the beginning. So we continue. Now you wait for this candle to finish. You buy here, you put your stop loss below this candle. You're buying here, you put your stop loss below this candle. Or you can wait for the market to come back down before you execute your what? Your buy. Meaning still our support here is being respected. The same thing applies here. When you buy around here, you put here your stop loss, market will come down, it won't attack your stop loss. Boom. You see, the market has boomed to the upside. Still, even though you buy here and you put here your stop loss below this candle, you're buying around this price and you put your stop loss below this candle, still market is respecting your what? Your stop loss. Now another what? Another minor sell is here. This is a pullback. You have seen it. This is a pullback. You take it to be your what? Your resistance. But for the resistance thing, I will come later, since we are experiencing only buys here. Now right now, you see, if you continue analyzing and watching the price minus putting there an indicator, I think someone could be there saying, hey, there is a moving average there, let me delete it. Just watching naked price. Now we come here, our bias is still buy. We come here, we identify this bullish engulfing candlestick. Yes, if we were still in the market at this time, let me not confuse you. Let me shift some of these things. Now, if we are the Bulungi, we have identified our support here. We come and say, let us wait for this candle to finish printing. Boom, we buy here. We put our stop loss. We put our stop loss below here. Boom, we harvest some pips. You get? We harvest some pips to the upside. The same scenario happens to the 30 minutes time frame. You see, now if this is the zone we have identified there and then, we buy around here. We put a stop loss on our previous candle. Boom, the market goes up. You see, this is a harami candlestick pattern. You get it? Our bias is one, buying, because we did a top-down analysis for our 1 hour. 30 minutes we came to, so that we saw that the market is going to the upside. You see, you buy here, you put your stop loss below here, or you can wait for market to first pull back down here before you buy. After identifying this zone, then you put below here your stop loss. Boom, the market respects your stop loss. Now when you enter a trade and you see that you're in now the winning side, you can trail your stop loss. You trail your stop loss by putting it in the, I hope everyone knows how to trail his stop loss. So yeah, you trail your stop loss above the entry point for the buy, but below the entry point for sell. I hope that one is clear. So I come here, I buy here, I wait for this candle to finish printing, I wait for a small pullback. You mute your mic, mute your mic, mute your mic. See, I buy here, I put my stop loss here. See, the market is respecting this support. I continue. I've opened my charts right now and I've seen this candle is the one printing, and I've identified the support here. I'll come and say when this candle finishes and pulls back slowly, I will enter with a buy because I've identified a harami support this side. Boom, the market respects, and you can harvest some pips in this. Still the same thing happens on the 5 minutes time frame. This is a 30 minutes support zone. You see, same thing happens. I'm going to buy here, then I put my stop loss below this candle. And another thing, like if you want to put a very minimal stop loss, you'll have to be patient. You'll have to first be patient for the market to pull back down here. Then you execute your buy. Then you put your stop loss below. That will be very minimal stop loss. Boom, the market will be in your direction, and you will smile. The same happens to 5 minutes. Just know this is something I discovered, and I was really very happy. I'd never seen this thing. You see, you identified this on 30 minutes time frame. Boom, you bought here, you put your stop loss below here. Market was playing around this region. Boom, it went up. Now this kind of finishes printing. You put you've entered the market and you've seen this candle. After identifying this support, you buy here, you put here your stop loss, boom, the market will respect your stop loss, and it will continue to the upside. Now another thing that I discovered when I was reading the Zen book, the Zen Trader, it is about good psychology, and it is really a very good write-up. I downloaded the book and I shared in the group, but I don't know whether you guys are reading it. It is an EPUB. I don't know if you want if your if your file readers don't accept PDF, EPUB, I can find for you an application that does read EPUB, or I can convert it for you to PDF. I'm so generous. Everything I'm doing for you for free. Anyway, let me continue on a 5 minutes time frame. The same story happens. See, if you buy here, put your stop loss, boom. But now the thing I'd wanted to say is, when you see another setup form, that's when you can close your position, and you wait for the same sequence to happen. You wait for the same sequence to happen, and the strongest support and resistance zones are on 4 hour, 1 hour, and 30 minutes. 4 hour up to 30 minutes, even 15 minutes, you can find them there. But the ones on those 3 time frames are very strong. Even the daily time frame, they are there. So if you see another support region form, if you've bought around here, you see another support region form, please close. Or you can keep on trailing your stop loss, until you're taken out by stop loss. This is the method I discovered on 21st of this month, and it made me it shifted 0.25 to $4. Understand? So the same applies to each and every chart. I've tested even currencies. Even currencies, it applies. So let me go maybe to gold. You see how I mark my charts. So let me go to gold. Let me delete this. But this time around, let's do on a currency. on a currency. The same scenario, the same story happens even on 1 minute time frame for the scalpers. Is it Marvin? Marvin likes scalping. You can now sit variable on G on 1 minute time frame and you scalp. Hey, it is not Marvin, it is Davi. Davi is the one who likes scalping. This very system can help you scalp even on a 1 minute time frame. So let us go to a currency gold. Let's go to gold. For our, we identify our, but I think we should look for a sell because the first session was for buying. Let's look for a sell scenario. Sell is here. We have come to, we first identify the market structure. That is number one, very key, very important. Market structure. This one is making lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. See previous lower low being retested. Can't find the previous lower low here. See, can't find the previous lower low here being retested. Maybe this one forms a very good previous lower low being retested here, and the market went down. Look at this strong momentum candle. So now let me zoom in a bit. So for our minute time frame, we first identify the support region. We have seen a bullish engulfing pattern, bearish engulfing pattern here. You see, we wait for it to form. After seeing it form, this one here, this candle, it is engulfing this one. Boom. So I'm looking for a sell since bearish is engulfing bullish. Looking for a sell. Boom. I sell around here. Let me first change the color of this. I sell around here. I put my stop loss above here. Boom. Market will respect my stop loss. It goes to the downside. Again I sell around here. I put my stop loss on the previous candle. Boom. It is being respected. Market just went down. I identify another region here. Identify another region here. Boom. I wait for it to come back in this, or I sell here. I put my stop loss on the previous candle. I sell here, and I put my stop loss on the previous candle. Boom. Market respected my stop loss. Market respected my support region because of this strong momentum candle. Boom. The market went down. Again, I come back on this. I identify this region. I sell here, and I put my stop loss above this previous candle. Boom. It continues going down, you see. Likewise, even though I find the market around here and I sell and I put my stop loss above, you put slightly above the highest point. You see, I've left some small gap there, some small pips, because a spread can take you out if it backfires to your what? If it comes back to your, if it is hunting for you, it will come back. So you put up small, but when you're in profits, you trail your stop loss. Still the same scenario happens as you go down. We have now when it forms another support region, that's when you can take profit. Stop loss, take profit. This method, it has helped me to be patient. That's number one. And number two, it has helped me to tell my insight that you're entering at the, if I open a chart and I see the market moving, I say now I'm going to enter the market, but where is my stop loss going to be? That's the number one thing that comes in mind. Where is your stop loss going to be? So this method is not a holy grail, but it has some win rate. When you sell around here, put your stop loss on the previous candle, boom, you kicked out. You're kicked out. When you're kicked out on a first trade, someone will say, this strategy doesn't work. Let me try another strategy. My dear, you stick to it. You first practice it on a demo. It is watching only price. There's nothing like indicator, VWAP, what? Nothing. Uh, I have not put any. Just watching price and candles move. I mean candles print to the left. Please always watch your left. Watch your left. Uh, Now I continue. Here we are kicked out, but you can say, since I've been kicked out, I'll wait. Now I wait. Engulfing. I sell around here. I sell around here. I put my stop loss around here. This is the candle. I sell around here. I put my stop loss above there. Boom. Market respects this support here. I mean this resistance. Uh, I think the story continues like that until like that. I hope you've learned something. I'm grateful that you've stuck around, and I'm also happy that at least I've delivered the little that I've learned. You know, a lot of people don't share their knowledge. They mean, say, pay for my knowledge. You get. I think this time around, I will say thank you. I don't know whether I have some questions to answer. For those who came late, please next time keep time. Uh, yeah, yeah. I think let me end here. Any questions, Mr. Marvin? Marvin, any questions? Davis, any questions?
Yeah, I have some questions.
Yes.
Yeah, so basically my questions are concerning the calculations of stop loss and all that in the river. Okay, me, I have just like a background in Forex, so I don't know so much about the estimating of the stop losses in what in the river. So I'm trying to. Okay, is there like a calculator? Oh, could you show us how to use that calculator of theirs?
Like you want to know how to calculate stop loss, how much amount of money and the pips you'll be stopped out. Well, very good question. There's something
That's it.
there-
Yeah,
there's
that's it.
there's something I use. It's called the pip calculator. You see, I've pinned it here. So I click it here. I click it. You can just type in a pip calculator and you put there drive. When you calculate it, when you click there, it will bring you this results. You click. You have to first see the word drive.com tools, trader tools, pip calculator. You click on it. After clicking on it, uh, they offer these tools, but the calculation is given to you besides here. Where has it disappeared from? You can click here to expand and you see how everything is calculated. Which asset do you want us to calculate, Marvin? Which asset do you want us to find out?
Let's use VIX 75, the 1 second, and also the VIX 25, 1 second.
Okay, 75 now. Mm, this is they give us two tabs. You know, Derive has indices and finances. So if you want finances, you come and click here. If you want indices, you come and select here. For indices, these are the indices for. I mean, these are the Derive indices, and for finances, these are the symbols that Derive offers. You'll go through them. There are very many assets there, but now since you've said we go to 175, S, it is there. Uh, what is the minimum volume of 75? It is 0.00. Yes, Marvin, the minimum is 5, 0.005, okay?
Actually, that's what I wanted to know because now
Mm,
volume, then point value. You
mm,
see, actually, the main problem here is point value. Like, how do you know point value? Because you see, just like Forex,
mm,
in Forex, you know that maybe, okay, for Forex, they would want maybe the price,
yes.
the current price.
Mm,
Then they tell you maybe to, then you feed in the maybe put. Actually, even in Forex, you know that if it has moved this number of
pips.
this number of pips, you have lost this much.
Okay, for this case,
Yeah, so maybe that's a good.
for this,
I'm
f-
trying to compare and contrast.
okay, for this case, if you put the minimum lot size of 75s and you have like 200 points, hmm, this will give us $1. These are the point value, $1. Have you seen? It is here.
Okay. Yes.
When you enter with this lot size
Mm,
on VIX 1S and it moves
mm,
200 points. And how do you measure points? You come to your calculator here, then measure from here to here. Are you seeing the points? Are you seeing the points?
mm. Okay.
You're seeing them?
First go around the measurement tool. I want to see it.
It is this cross here. You're seeing it?
Okay, the crosshair.
Yes, you click on it, then you measure from here
Yeah,
to here. Have you seen?
I see.
You're seeing
Yeah,
it? Oh,
yeah. So all those points, it's what you put in the calculator.
yes, it's
Then you're
what.
able to determine how much.
Yes. Or you can do like this, eh? Uh, you can do it on a demo. You can do it on a demo. You say
Mm,
you get the lot size times the number of points you've moved. It will give you the answer. Hmm?
mm-hmm.
Lot size, that is
Okay.
0.005 times maybe 4,000 points. Hmm? Let us
Mm,
let us put here 4,000 points and we see what it gives us. 4,000 points. Boom. It will give us what? $20.
advantages. Okay.
Yeah, but for the case of other assets, they keep on varying. Mm, they keep on varying, and for VIX 75,
Mm,
for VIX 75,
mm,
you're seeing these two digits. Eh?
yeah.
This is a pip. This is the 56
Yes.
pip. This is a pip. You see, the last value is a pip.
Mm, mm,
Mm? Then this one, you
mm.
count at 82 pips. Mm? Now,
Okay.
for the currencies, unfortunately, I think, for the currencies, let me see.
But okay, it changes. Let's not even compare now.
Yes,
I feel like they are very, very different.
you see this small five here. This is a pipet.
Mm.
This is a pip.
Yeah, in currency.
Yes, in currencies, this is
Yes.
a pipet, a pip, 90 pips. Okay. So now, for
Mm,
the case of derive, hmm, uh, you've seen how I've measured the points and how you multiply in the calculator after selecting the
mm,
asset.
mm.
It will tell you. Also, another thing I can advise you is you just do the things manually. Get a pen and a paper and do them manually. You say I've gotten 200
Because
points.
actually, you see, that's what I usually do for the normal forex.
Mm-hmm.
Like just have your calculator. You type whatever you want.
Mm,
But now for this one,
mm.
you don't just come.
Yeah, you have to
You
do.
don't just come. So I did some of those things because I wasn't having access to them.
But now you'll see this guy will help you out in any financial asset you want to calculate. Okay, and
Okay, I'll consider that.
I
Mm.
hope my new strategy has at least has opened your eyes to see.
Man, by the way, for that strategy,
Uh,
let me not lie. I haven't tapped in because I quick indicators.
you
Whenever I see indicators, I run. I don't know how to use indicators, so
yeah,
they
no,
usually mess me, and
and
I use these other methods:
I also gave up on them. That's why my chart is
supply,
lagging.
demand.
Yeah, you see now.
I use supply, demand, market structure,
Mm,
then those tradable order blocks.
mm,
Yeah, and some other few things I'm trying to adopt, though I'm trying to come up with a very, very good strategy that
uh,
can be used.
okay, but I
Okay,
hope.
well, like consistency, because man, I haven't been having consistency.
Yeah, truly. But if you find some time, try this new thing that I've shown you. it is good
mm,
to make the trades on 5 minutes time frame. Take for instance,
mm.
if I'd identified.
Okay, but you guys, man, that's too much pressure.
Pardon, pardon.
Do you know that cutting can spike up?
It is
Do you know
okay.
that cutting can spike up?
It is okay. Of course, you'll not get everything correct. There are some that you'll, eh?
Mm,
and it's better to do it
mm.
on a laptop than on a phone, because on a laptop you can do
Yeah, that is a
perfectly.
fact, man.
Yes. So in your trading plan, say I don't trade on a phone, but I trade on the PC as your plan. Mm, you get. So if you see, if I was around here, who is this one joining right now? Hey, someone has gone away. You see, if I identified here, boom, we buy, maybe we sell around here, we sell around here, we put our stop loss above here, boom, market will respect. um, Hello, is everyone around? Hello, is everyone around? Well, I am thinking I should end this class. I think I should end this class. Thank you for attending. Bye bye.